Thank you. So, ladies and gentlemen, please help me welcome our first panel member, Mr. Topendra Bhattacharjee, Head Digital RBL Bank. And we have a big round of applause for Topendra. Topendra, welcome to the panel, welcome to the dais. Extremely delighted to have you. Please do take your seat. Joining Topendra, we have Mr. Srivaths, Varadharajan, COO Spice Money. Can we have a big round of applause for Srivaths here? Srivaths, welcome to the panel and welcome to the dais. We are very excited to have you. Please have a seat. Joining them, we have Mr. Sabyasachi, Senapati, Head Banking, Vertical, BharatPe. Can we have a big round of applause for Sabyasachi here? Sabyasachi, welcome to the panel. We are delighted to have you. Joining next in the panel, we have Mr. Sandeep Indurkar, Head Digital Payments, ICICI Bank. Can we have a big round of applause for Sandeep? Sandeep, welcome to the panel and welcome to the dais. And now I would like to call on stage the honorable moderator of the panel, Mr. Padmabhushan Bahadure, CTO, IDBI Bank. A big round of applause to Padmabhushan. Padmabhushan ji, welcome to the panel. Captain of the ship and moderator, all over to you, sir. And wishing the panel all the best.
Good morning, everyone. Hope I am audible to all. And good morning to the panel members as well. I think so interesting topic. I believe second panel of the day. Hope we get all the focus attention to the discussion. The topic is very, very, interesting, and the times also are interesting nowadays. Okay, with all this, fintechs and banking coming to the play. Now, before we move on to the topic, I would like to get the panel members introduced. So, right from you, Topendra ji, you can introduce yourself.
Hi, good morning, everyone. Thank you for having me here. I manage digital for RBL Bank, the entire B2C foray that we have. I have been in this space for about 8 years now, and have done, I have done about 22 years of banking so far. So I have been a commercial banker at heart, and from there on, I have moved on to helm the digital portfolio for RBL. Thank you so much.
Thank you. Hi, I'm Srivaths Varadharajan. I represent a rural fintech organization called as Spice Money. I've got around about 23 plus years of experience working across all verticals in banking, telecom, as well as airline subdivision. I've been working as a global fintech and digital evangelist for more than 2 decades now. Worked across almost all functions. Looking forward to have a good discussion along with the panel. Thank you.
Hello everyone, my name is Sabyasachi. I'm from BharatPe. BharatPe very recently, in partnership with Centrum, we got a license to start a new small finance bank. We've called it Unity. So I lead the entire banking vertical at BharatPe. Where BharatPe comes into the picture is we're driving the entire product and technology development for Unity Bank. Right? Professionally, I'm less of a banking guy, more of a startup person. Before BharatPe, I've spent few years in e-commerce as well as fintech space. And in my previous avatar, I worked in consulting, where I worked across a variety of sectors, including financial services, pharma, energy, and so on. Excited to be here.
Hello, hi. This is Sandeep Indurkar. I had digital payment for ICICI Bank, and I have been in the digital vertical from in ICICI Bank for last 16 years. I broadly divide my experience into 3 different stints. The first stint was of handling internet and mobile banking. I launched iMobile for ICICI Bank in 2008. The second stint is on mobile payment space. And mobile payment, it was started after 2010 when most of the entities wanted to get into mobile banking business, like Airtel Money wanted to do something, Nokia wanted to do. At that time, I was fortunate to had this vertical of mobile payment, and I was instrumental to get Vodafone M-Pesa launch in India. Then the third, which is the current stint of digital payment, this started 5 years back when most of the payment platform was of open architect in nature, and bank were forced to look outward rather than inward on their own customer base. Started with IMPS, then UPI, and my most of the time goes into providing solution to fintechs, and we work with almost most of the player in the fintech space as well as e-commerce.
So thank you very much. Thanks for the introduction. Now moving on to the topic, there are many topics to be covered in this discussion, and the key theme is about Fintech 2.0. Okay. Now let me set the context. What are we going to discuss about in today's panel? So we had seen, or we are seeing, the Fintech, say 1.0 avatar or version, whatever you may call it. Now in this, we have seen many apps, okay, and they have actually made substantial impact on the banking and the journey of the customer in terms of payments, in terms of other financial services. But really, have they tapped onto the huge potential that they can gauge, or they can disrupt the entire banking? The answer is 50-50. Okay. Now that's where Fintech 2.0 comes into. So what was lacking in Fintech 1.0 is we had too many apps. We had fragmented journeys, too many apps for payments, too many apps for the other financial services, okay, merchant payments and all those things. Now Fintech 2.0, what the underlying theme is basically about rebundling or unbundling, okay, where we have something like a super app, okay, which takes care of not only the customers' financial needs, but it goes beyond that. And we have a single app which will take care of your payment, which will probably take care of something like buy now, pay later, request for pay, and other things. Now that being the theme or the underlying principle on which Fintech 2.0 will work, how does banks and the fintechs, okay, work in tandem or compete with each other to get most out of it? Now to give you some facts and figures, okay, we have seen so many fintechs vouching or in the journey or in the race for becoming the unicorn, something like 1 billion revenue or valuation, okay, on that perspective. But if you just see on the bank side, on the global financial services, about the top 200 or 300 odd banks have total revenue worth of about 4 trillion. Now that's a huge opportunity for both fintech as well as the banks. Now what fintech brings to the table, as we all know, the technology, the speed to innovate, the customer experience, new technologies on algorithmic data models, AI-based systems, okay. And what the banks have as their strength is the trust factor is there. We have the expertise and the infrastructure to deliver, and also taking care of the heavy lifting on the compliance piece. Now, if both want to succeed in Fintech 2.0, banks and the fintech will have to go into a partnership model. I think so. Yesterday also there was a discussion where this topic of partnership was touched upon. Now, how does this partnership work together? The basic principle on that is, again, customer centricity. Okay, we need to keep customer at the forefront for all our offerings, be it the banks or the fintech. So now with this this background in brief, okay, the first question, Topendra, to you. When we are keeping customer at the forefront of whether Fintech 2.0 or the digitization, okay. Now in that, as we had said, all ecosystem players need to collaborate, work together, and give a comprehensive kind of service to the end customer. Now what does this mean for RBL Bank, or in general the banks as such? And what has been the approach so far for RBL? If you please elaborate on that.
Yeah, thank you. I would limit my conversation to how the environment has been spanning out rather than focusing purely on the bank.
Fair enough. Fair enough.
So typically, what is Fintech 2.0? This is, I mean, if you go by some pundits who have defined it, it is the way in which evolution of fintechs have happened between 2018 and 2020 and so on. Now, I think we have evolved a little more around that space. But typically moving from a product architecture to an open or a platform-based architecture where you cover more, more population and your use cases are widerly used is what typically was defined as Fintech 2.0. Now, if you see 2-3 things which came out of these conversations with fintechs after the emergence in this format was lighter tech architecture. And when I say lighter, it is more of open and more collaborative tech architecture. On the business side of it, partnerships between incumbents and the fintechs started to evolve in a different format. It became more cohesive. And thirdly, if you look at it, the coverage of these fintechs became much larger in nature. Now, case in point, if you look at UPI, the way it has grown across the 3 main players, and now maybe with Amazon Pay, a 4th player has emerged. But if you look at it, I mean, typically, it's a relationship between the rails that NPCI has provided, the APIs that the banks are, you have to have a sponsor bank there, and you have a fintech which is playing on the top layer. So that's the width of how things have changed. And of course, therefore, along with COVID coming in and adoption increasing, etc., and also the seamlessness with which onboarding has happened, the adoption has changed manyfold, and therefore we see numbers like 6 billion transactions in a month for UPI and so on. So this is one of these examples. There are many such use cases which are evolving in a similar fashion now, and I think many of our colleagues here spoke about the way in which SME lending or other lending products which have been evolving around. Now, what have we as banks done, or at least a little bit of a representation from our bank itself? We started with maybe in the years 15, 16, we were more focused towards transaction patterns. It was more transaction-driven ecosystem, and we were talking about mostly transactions through PPIs, through APS, and so on. Then we moved to partnerships around lending, and there were many such partnerships which evolved, grew, and have become permanent in nature now. These also include some of our large card partnerships which we did, Bajaj, Zomato, etc. Currently, we are talking about deep partnerships with fintechs, where we are talking about what we all know as neobanks. While definition in case of India for a neobank is very different from what it is for the world. But typically, here again, an incumbent and a fintech relationship is at its prime, and if you see it. So whether it is, Fi, Jupiter with Federal, or Razorpay with us, and so on. So these are, relationships which are evolving in a particular format to improve customer value proposition. And the combination of the two is a lethal combination. However, in the given current environment and the given scenarios of the regulation, etc., it is that the roles are well defined almost. What we need is more clarity from the regulator in terms of how various other things to share has to happen. But mostly, the roles are defined in terms of, the governance is heavy lifted by the financial institutions and the banks, and the customer experience, because of the agility with which the technology innovations can happen, is done by the fintechs. So this is how primarily fintechs have spanned out in the current scheme of things. I think I will pick it up while the conversation is progressing, and maybe give more tips around it.
Sure. Thanks. I think so interesting comments you made about the light tech infrastructure or tech stack, okay, and the regulation as well. Taking this conversation further towards Srivaths, okay. Now, in terms of Fintech 2.0 or the commit made by Topendra, okay, regarding how fintechs are currently operating, what we see typically is fintechs are right now on the edges of the banking processes, okay. There is a huge scope on other areas, something like clearing, settlements, okay, and probably moving towards more of the core, okay. how do you think this will grow in terms of, say, fintechs like Spice Money, and what would be their approach towards it?
Sure. I'll just set the context so that it will come in line with the question that you've asked. So, Spice Money actually represent the India's largest fintech organization, which means we are available more than 18,000 pin code and majorly focus across tier 3 and tier 4 locations. Now, strategically, while building a rural fintech organization, we need to understand the dynamics of Bharat. The dynamics of Bharat is actually not restricted towards the tier 1 and tier 2 locations. It's restricted more towards the population. 61% of the population is towards tier 3 and tier 4, where actually your business lies. Though your tier 1, tier 2 will give you, because of the better per capital income, will become a cash cow for you, but your sustenance and further growth for financial inclusion and also to make a $5 trillion economy for, you can't operate without macroeconomics, right? So your growth as an organization has to be in line with the macroeconomics. So which means when you focus towards the tier 3 and tier 4, that becomes the last mile for you. And who is the first mile? The first mile is the banking fraternity, which is a treasury, which has got an appetite, which is better equipped to manage regulations and asset liability management. Now the last mile becomes much more crucial because that is where the consumption economy is growing. Which means when you extend your user experience, your capability and your product suites, which is going to be consumed by the last mile consumer, has to be simplified. Why it has to be simplified is because the smartphone penetration in tier 3 and tier 4 is not more than 35%. Which means if you are expecting that you will have a super app being created for tier 3 and tier 4, and if they download it and they'll start consuming the product, it's not going to happen. So how is tier 3 and tier 4 today operating? The tier 3, tier 4 in Bharat is operating to a digitally assisted mode. So when I say digitally assisted mode, we have got around about 1 million merchants with us, 1 million plus merchants. In next probably 3 to 4 years, we might reach up to 10 million merchants. These merchants are digitally savvy people who actually take the entire digital ecosystem built by Spice Money, which is powered through API from the backend bank, and they consume these digital capabilities and serve the last mile customers. And this is how it is going to exist for another 4 to 5 years. We have seen that there is a tremendous growth in UPI happening, but not more than 35-40%. India is largely a cash economy. It is going to remain a cash economy at least for next 7 to 8 years, till the time you don't have a tax reform coming into the entire Bharat. Now the mode of operating is largely in tier 3 and tier 4. It is a self-employed or an entrepreneur kind of an economy, which means largely the dealings are in cash. To very large extent, because of Jandan, the bank accounts have got opened. Because of the subsidy schemes which has come over a period of last 3, 4, 5 years, the Pradhan Mantri Yojana schemes and other things, large amount of bank accounts are open, but it's more towards the cash withdrawal. The consumption economy will grow through digital ecosystem when you will have more deposits coming back to the bank accounts, and then it gets into the transaction systems. So largely to say, the fintechs will have to coexist with banks. One, because the product suite created by the banks has to be in line with the regulations, because we are, as a financial country, we are largely regulated by RBI. So it also becomes responsibility of the fintech organization to follow the regulations which has been put by the bank, keeping the compliance limits on high, and identifying the last mile partners who will help to serve the digital India. That's how the whole ecosystem is going to get evolved over a period of 5 years. Thank you.
Yeah, thanks, Srivaths. And it's an interesting comment made by Srivaths about cash economy. Just to give you some facts. So around in 2020, there were about 17.4 lakh crore cash transactions happening in India, even because of the, even if we ignore or exclude the COVID part. So there is a huge potential for digital. That's what it means. Now coming to Sabyasachi, the question for you is, say we all know what Fintech 2.0, say as Topendra and Srivaths explained, okay, about Fintech 2.0 being customer centric, and we'll have to have a whole ecosystem of say banks and Fintech working together. The question to you is, this means that Fintech will have to be more and more, say, techno-savvy and work more like an IT company, okay, where they deliver, say, develop and deliver solutions which are in tandem and also integrate with, say, the banks of the world. Okay. Now, what is Spice, say, BharatPe doing in this field, and in terms of what approach BharatPe is going to take for the next few years?
So, I think strictly speaking, like we were discussing just before the session, we're sitting at a probably Fintech 3.0 or a 4.0. If you consider the 2013, 2014 as Fintech 1.0, where we started with prepaid wallets, right? A lot of ecosystem and life has changed since then, right? Now, from a BharatPe perspective, most of our journey essentially has happened in the last 3 to 4 years. And we started off as a merchant focused company, focusing on UPI-based transactions. And our focus continues to be that way. Merchants are still at the core of what we do. We have sort of diversified into offering BNPL product for end consumers. But merchants in some ways remain our bread and butter. Now, when we think of technology, right, and interestingly, like you mentioned about, fintechs thinking like an IT company, right? See, technology doesn't necessarily mean only products, features, and user experience that you're bringing, right? But the way you're developing these products and features, and how quickly or rapidly you're bringing them to market, that sort of matters as well. As a result, what we have done at BharatPe is there are 2 or 3 things we do in a overall technology or product development cycle, right? First is, basically employing an agile approach, which essentially means is right from product conceptualization to prototyping to getting out the MVP in the market, testing, and then sort of making incremental additions, enhancements on it. We're talking about matter of weeks rather than months, right? Case in point is when we launched PostPay, which is our BNPL product late last year, right? The entire journey from conceptualization to hitting the market took us a little over a quarter, right? Now, probably 3 or 4 years back, the time for developing such an app and getting to such a reach would have been 3 or 4 times as much, right? So using an agile approach. The second thing is, what we strongly believe is, what we call is, do less, but do well. Which essentially means is, we don't need to develop everything on our own, right? In developers' language, we don't need to write the entire code block, right? We know some things very well, like for instance, UPI payments, like for instance, KYC and validation of the end consumer, right? And wherever we feel there is something proprietary we can do, or something that is very core, we'll keep it in-house. But then there are a bunch of things for which there are tools that exist in the market, the solutions that exist in the market. Then the idea is how do we stitch them together into a sort of a cohesive product, right? So the IP that you're bringing then is essentially thinking through the product flow, thinking through the user journey, right? And then trying to get all these blocks together. Some of these blocks exist in-house, and some of these solutions exist outside, right? How well you can integrate them to create a seamless user journey. That's where I think the value lies, right? So do less, but do it quite well. Right? The third thing is, as a payments-focused company, as you grow, scalability and reliability becomes very becomes very important. You need to hit a 99.9x kind of percentage reliability, every time, every hour, every day. Right? For that, again, internally, what we deploy is something called chaos engineering, which is essentially, you are deliberately injecting failures in the system to test it ahead of time, right? So you're stress testing the system, you're stress testing points of failure, right? As a result, our payment and settlement percentage is one of the best in the industry because of this. So I think these are some of the things that our engineering and technology team adopts as part of the development process. Apart from that, in terms of what we have done in terms of product features and all, like I mentioned, right, we continue to be a merchant-focused company. So some of the features that we keep on adding, for instance, we've recently launched something called Paisa Bolega, which is like a sound box, right? So every time a transaction happens, the merchant sort of hears it instead of trying to check the system or trying to check the dashboard, right? Beyond payments, we've gotten into merchant lending, where we use the payment transaction data, and there's a lot of sort of proprietary underwriting we do there to lend out small ticket size loans to the neighborhood sort of kirana store or the merchants, right? Until date, we have sort of dispersed around $500 million of loans, right? So I think these are some of the sort of technology development kind of methodologies of that we have seen.
Yeah, thanks, Sabyasachi. Question to you, Sandeep, is see, we have heard both the fintech, say, our partners here. Now, say, when we see on the fintech and the banking ecosystem, for every odd process, okay, that we have in banking, there is generally one or the other, say, startup or fintech available. I'm talking about the retail space. Now, question to you is, what is the approach, say, ICICI has taken so far, and what is the change in the approach, or what new approach ICICI is thinking for this perspective? Because, see, we have been talking about collaboration, partnership, all that is fine, okay, but then on the ground, when, say, money is put on the block, what kind of approach does the bank take?
As everyone knows, the core business of banking is accepting deposit and lending, and in this process, bank makes the NI. So this is the core function, and it is actually a very compliance heavy. Hence, the bank focus would be more on compliance, and around this core business, there is a need of building a layer of services for the customer, say in terms of operating his account, providing payment services or collection services, or providing an access channel. Here, what we see is that is a good opportunity to partner with the fintech player, and we see more a collaborative approach with the fintech player rather than a competition. They have a good ambition to go deep into the retail segment, be it a retail customers or it is a retail merchant. Retail merchant in the sense everybody, even we want to have in acquire merchant in all the nook and corners, and from large retail outlet to small mom and pop shops, right? And having that much reach is not a job of one player, right? It is a collaborative approach, and here we see a good partnership with fintech. Similarly, in the retail segment, if you want to go into deep, like for example with UPI coming in, it is an interoperable platform, right? Whereby you can onboard customer of any bank, right? To that extent, you have an opportunity to reach out to all the banking customer, right? So here, our partnership approach has actually helped us to reach to all this customer base. And in fact, in UPI, if you ask me, from the PSP side, ICICI Bank has a leadership position just because we have done partnership with all the fintech players, or take the name of the leading app like Google Pay, Phone Pay, WhatsApp of the world. We have partnered with everyone. So that is our approach mainly from the ICICI Bank point of view to actually reach as much as possible.
Yeah, thanks, Sandeep. So a follow-up question to you. See, we have been seeing, say, blockchain as one of the, say, pillars of, say, innovation and garnering a lot of potential. But we have yet to see the light of the day. Now, one thing that gets neglected, okay, is about the AI piece. And we have been hearing about, say, banks being working on AI-driven models, AI-driven, say, help for the lending, or on the analytics side. Now, this is what has been happened till date, okay, or in the past. Going forward, when we look about, say, this new era of fintech, what do you see in terms of the potential for AI, and how would the banks take it forward?
Yeah, AI, ML, blockchain, or IoT per se, these are all emerging technologies, and in fact, these are going to play a very crucial role in increasing the digital adoption. For any digital adoption, there are actually three pillars which need to be focused on. One is actually a customer experience, the other is operational efficiency, and third is the compliance and risk. I think all these emerging technologies can play a very crucial role in advancement in all these areas, like be it in customer experience, AI and ML can play a very good role there, and similarly even a blockchain in terms of providing a reliability and availability of services. Similarly, in operational efficiency, take an example like NPCI is also trying to improve the operational efficiency in terms of settlement through the Vajra platform which is on blockchain. similar would get extended on for UPI as well. And third thing is regarding compliance and risk. There also I feel AI and machine learning will have a very important role to play because as the transaction numbers are growing, right, the same channel is getting misused from by fraudsters, and a lot of customer monies are siphoned off, right? This thing can help in terms of putting controls, checks, and mitigant in place.
Yeah. Thanks, Deep. I think so. On the blockchain piece, see, already ICICI Bank was one of the first banks to do on the IBBIC blockchain piece. And recently, to give you a fact, I think so RBI Innovation Hub also is working on blockchain primarily for a couple of use cases with various sub-member banks. We have two, fintech, partners here on the panel. So a question to both of you, any one of you can pick it up. See, we have a lot of, talk about open banking, and there are, discussions happening, okay, if the APIs of the open banking can be used by, the fintechs, okay, to get the information from the banks, okay. But in the long run, how do you see this open banking helping the fintech sides in comparison to the bank side?
Open banking API from the fintech perspective is more in terms of bringing in speed. It per se doesn't add any product or value add to the end consumer. I would rather like to disrupt the market. How I would like to disrupt the market is, why do I require a CASA account? If I have a customer who has got a wallet, okay, and in the wallet, if the amount is not moved back to the bank, and if I compensate him with some soft transaction, some soft coins, or indirect interest amount, I can't give direct interest amount because RBI will not allow me to do that, and help him to make the money remain in wallet and use that more towards consumption transaction. That's where the innovation will come. So the open banking API in today's world is more towards integrating for CASA account, for current account, for your liabilities account, your asset account, and then utilizing the banking backend ecosystem and making it much more user friendly for the user to subscribe and consume. Beyond that, it doesn't value add. That's where it's coexisting in the ecosystem. But it's high time that we need the disruption, and that's where Fintech 3.0 will come, where you need to put the customer in the front end, which means the rural customer in the front end with a digitally assisted model, where you understand his entire per capita income and life cycle and stitch the product according to his requirement. Right now, what's happening in the financial services world is you define the product as per the profitability of the product, be it anything, be it banking, insurance, or broking, or any space, and then you force push that to the market. And that is where the gap actually starts, because the product primarily, when it is put in the mind, the entire segmentation which is spread across different cohorts is not taken into consideration. It's like one size trying to fit to all. That's the second level of innovation that will come in Fintech 3.0. And here is where the Fintech players will have to play a critical role, because they understand the personification and cohorts very well. To understand the personification and cohorts very well, you need to go with a design thinking approach. If you ask me today, you actually don't require an app. You require an integrated communication ecosystem which integrates with the backend commerce systems, payment systems, and facilitate it. You don't require an app. How many times, the question, if you roll down yourself 5 years back, people used to ask how many times you have visited bank. My question to you all is, how many times are you getting into banking app today? It will be hardly. 5 years ago, you used to get into banking app for checking the balances and doing fund transfer transactions. Today, you don't have to do that. You can log in into the other intermediary fintech apps, which is in turn interconnected through open banking API. That is where the answer to your question comes in. And that facilitation is available in one-stop shop. Now, this when gets extended to the rural India, that is when actual success and innovation will start coming in, because there is less potential to penetrate just in tier 1 and tier 2. Your actual growth is in rural India. Thank you.
Okay. Thanks, Srivaths. Interesting comment made about, there is no need for an app, but rather, a service which integrates and offers all the financial, touch points for the customer. Just to reinforce that, I think so, last month or couple of months ago, we had on the UPI about say 10.4 lakh crore transactions were hit on the UPI channel itself. And regarding the branches, say footfall, so all the Gen Z or the millennials that we classify them as, say about above 90%, so 91% Gen Z and millennials, 95% of the people are using their, say, mobile phone for banking needs rather than going to the branches. Anything you would like to add, Sabyasachi, on that question about open banking?
So, as a fintech, we also collaborate a lot with different banks. And I think to some extent I agree with Srivaths on, the value that a sort of an intermediary like a fintech can bring, right? I think where fintechs come into the play is, one is obviously product innovation, right? They move a lot faster than some of the banks, right? So from conceptualization to getting a product out in the market, they can be a lot faster. Second is, reach or access, right? Often banks have a certain segment of customers, right? Like I think someone mentioned earlier, like, a lot of the focus of the banks has been on tier 1, tier 2 cities, right? Especially the private sector, right? Similarly, within that, there is a segment, right? There's a salaried segment, there's a self-employed segment, and so on. And therefore, banks have often had certain segments they've had focus on, and those segments have not grown, or at least they haven't gone beyond those segments, right? So fintechs, however, have the advantage where they can get into newer segments. So for instance, like from BharatPe perspective, we looked at merchants as a focus segment, right? These are small sort of merchants, kirana stores, mid-sized merchants, where who do, the average ticket size of a transaction will be 200 to 300, doing 10, 20, 30 transactions a day, right? Now, through payment, we have also had access to this segment. And then once, we have a certain track record of the merchant, we are able to lend to the merchant, right? And these are very small ticket size loans. These are loans of around, let's say, 50,000, right? Largely working capital loans, 6-month tenure, 50,000 rupees ticket size. Now, for a bank to do that on its own becomes very difficult because just the cost of processing and dispersing the loan will be very high, right? Plus, obviously, there is a collection risk if you are not, into the payment flow, right? So that is where I think fintechs, both in terms of innovation as well as in terms of access or reach, is where they have a role to play, and they can partner with banks in making these products available to these segments.
Yeah, thanks, Sabyasachi. I think so. Let's hope that the level of partnership and collaboration between fintechs increases, which ultimately benefits the end user or end customer. I think so. We are almost over the time slot given to us. Any questions from the audience that anybody wants to ask? Yes, please.
And any individual, or is it for the overall panel?
Yeah, I'm Rajesh Srivaths. I'm from State Bank. And it is for the entire panel I've been listening to, and we are very engrossing presentations and the panel discussions. So since many large fintech players are here, just want to know what are your expectations from the banks? How do we to promote this collaboration? See, we have been listening to, but somewhere there is a blockage. That way it is not growing. So what are your expectations from the banks, especially PSU Bank, if I can say so? Thank you.
If you can,
Can I
please.
take that? I would love to work with SBI, right? It's always been for fintech organization to connect with anyone as huge as SBI. So the expectation is very clear, agility, which means you need to have a separate cohort team working only with fintech arms separately and not clubbing itself with your outsourced partners or internal tech team. You need to rediscover yourself and create an agile team which works with fintech players, and that will completely change the dynamism and the understanding between the fintech player and PSU banks. Yep. Yeah. Yeah, but yeah, we would love to be in that state of mind. I'm sure in next 5 years, the PSU banks are going to be agile. not because there is a choice, it's because the mindset has changed across. You've got a lot of private players and the employees from private organizations who have also joined PSU banks, and the entire cultural change has also started coming in. So what we used to think about PSU bank traditionally, say 5-10 years ago, was actually apt for a kind of economy we were and a kind of maturity we had from a consumer perspective. So actually who brings the change out here is not the fintech or a private player or a PSU. It's the consumer whose demand is there for the agility. So we have no choice but to accept and move according to the consumer's demand.
Thank you so much, sir. I think for the interest of the time, any further questions?
One thing I want to add here.
Yes,
is
sir.
basically, see, among bank also there is lot of competition. So now you also have to decide whether you have to run or whether you have to leave the race. Because see, the fintech also wanted to run and they would like to partner with the bank who are running, matching their pace. So that is very important.
Thank you, sir. For the interest of the time, I would request any further questions. The panel members are available. You can always take offline. Can we have a big round of applause for this wonderful panel here? Mr. Topendra Bhattacharjee from RBL Bank, Mr. Srivaths Varadharajan from Spice Money, Mr. Sabyasachi Senapati from BharatPe, Mr. Sandeep Indurkar from ICICI, and Mr. Padmabhushan from IDBI Bank, our honorable moderator. I would now quickly like to call on stage Mr. Ashutosh Taparia, Managing Director Corporate Coverage from Credible, to kindly do the honors. Ashutosh ji, welcome again. Request all the panel members to kindly step forward for a group photo with Ashutosh ji. Ladies and gentlemen, can we have another round of applause for this fantastic panel here? Topendra Bhattacharjee, Head Digital RBL Bank, Srivaths Varadharajan, COO Spice Money, Sabyasachi Senapati, Head Banking Vertical BharatPe, Sandeep Indurkar, Head Digital Payments ICICI, and Padmabhushan Bahadure, CTO IDBI Bank, the moderator of the panel. Thank you so much, gentlemen, for that wonderful session, and thank you so much, Ashutosh, for doing the honors. So, ladies and gentlemen, that was the panel number 6, which was the second panel of the day, Fintech 2.0, Intelligent Technologies Transforming Banking Business.